What is up, you guys? Pete DiCarlo here, and today we are going to go over, is the stock market overpriced? And now the thumbnail on this video is about my SPY put position that I took. And the last time I did a video like this, I will link it down below. I titled it March 2020 SPY puts. And guess what? Like always, I ended up selling them too soon. And if I would have held them, I would have made over $25,000 in profit. But today I want to talk about, is the stock market overpriced? Where do I see the stock market going overall, primarily the S&P 500? And what is my strategy right now? So for those of you who are in my private academy or you've been following me on YouTube for a while, you know that I am a long-term investor. I love long-term investing. I believe that that is how wealth is built, but I am a trader. And so we're going to go over some technicals today, and we're also going to look into some fundamental reasons why the stock market could fall. So first of all, here we have the S&P 500, okay? So this is the ticker SPY. We are on a 4-hour chart. If you guys want to go along with me with this, I'm going to erase all of my little my lines and stuff, and we're going to go over really what has happened. So we had this big drop, obviously, back when everything started happening, I can't say the word, in China. And at the time, we didn't really think it was going to be that big of a deal or affect our economy that badly. And this is when the real sell-off happened. So if we take our Fibonacci retracement level and we attach it down to the bottom here, we are going to see that these are some key support and resistances for the S&P 500. We had this entire move down. Since then, we have bounced in just about 3 weeks, 32%, which is crazy in my opinion, because I was a huge bull, not obviously as we were falling, but a huge bull around 220, because I was like, you know what, listen, the stock market is pricing in all of the pandemonium, all the craziness that's happening right now in the market and in the world. Things are not going to be as bad as they seem. We're going to have a V-shaped recovery. We're going to get back to work as soon as possible. And guys, the longer that this goes on, the more and more bearish of this situation that I actually kind of become, because I'm realizing like this isn't going to end soon. And the longer that this, shutdown happens, the more and more it's, obviously not only is this whole situation hurting people, from a health standpoint and getting people sick, but it's killing the economy and it is killing small business owners. And I was explaining to my students this morning specifically that it's not killing these big, massive corporations. It's killing the small businesses. It's killing the entrepreneurs. And we're going to get into that. But technically here, 300 on the S&P 500 has been a huge, huge resistance and support. We started moving up that way. We bounced off at 280. We're actually at 281.64 today. So I'm going to be enticed to see where we close today, if it's going to be under 280. But as you can see here with the Fibonacci retracement, this 278 area has been kind of a point that we've been fluctuating around. Now, if we were to remove this, we're going to see one of my favorite patterns. Setups, I should say. This isn't necessarily a pattern, but a setup. We can see here that, recently over the past 2 weeks, we've been making higher highs on the S&P 500, right? But we are getting what is called a bearish divergence. If you guys want to learn about all of this, I do have some videos, not specifically on bearish divergences, on the YouTube, but I also run a private academy that you can get your free month. Link will be down below. It goes over everything, all of this, our private Discord. It's an amazing community to be a part of. You guys probably hear me talk about it all the time, but that will be linked down below. But we're getting here what is called a bearish divergence, and this is when we are getting prices that are going up and up and up, but the RSI, which is our relative strength index, is fading and going down. And 8 out of 10 times, the RSI is really the one telling the truth. Now, also something to notice is all of the volume is starting to get pulled out of the market day by day. And think about it maybe as yourself, right? Look inward and think about this as yourself. How do you feel about investing long-term right now? If you had $1 million or $1 billion and you were a hedge fund manager, how would you feel about investing in the market right now? Personally, I do have long-term positions, but it's one of those things where it's not a deal. I don't think the stock market is a deal right now. I think that we have so many bad things going on that have not been resolved, and the market's just been moving up and up and up. I don't think anything really is a deal at this point anymore. And so what tends to happen in these situations, as we slowly grind up, the volume gets pulled out. We're making this bearish divergence usually, and we're starting to hold here, and then we'll fade out. Now, how far are we going to fade, in my opinion? This depends. I see minimally a pullback to $240. That's a pretty strong support. At least at this point, we need to come down to 260. So I think we're going to end up getting rejected, hold around this Fibonacci at 264, or pull all the way down to 260 on this 200-day SMA. So now if you guys don't understand SMAs, it's just a moving average. The wider out in time you go, so for instance, this is a 200-day SMA. This is the strongest line in the sand. This is your strongest moving average that you have. So you can see that I think we're going to end up fading down to this 260 area. Now, if we break 260, the next move will be 240. If we break 240, the next move will be 220. And if we break 220, the next big move will probably be 180 to 200. And I don't know if we're going to get there, but I would bet my life that we're going to go down to 260. Now, the matter is why and when. And we kind of talked about it. So my main bearish reasoning here is simply for the fact that nothing is seeming to get better. We had Gilead Sciences say that they found a treatment for it. This is where we saw this big move up last Thursday. Then we found out yesterday, well, that's not the case. We had this big move down. We're kind of holding here, but, we're not going back to work. This whole quarantine doesn't really seem like it's ending too soon anyway. Even if we were to reopen pieces of the economy, I don't really know if that's going to help as much as people really think. The other thing is, and it's not like this has to happen, but if you look at any pandemic or, for instance, the Spanish flu, there's always a second wave. And so while as a world, we're trying to flatten this curve here of infection and death, which is obviously great, a second wave will come of this. And I think that they're hoping that they can get a vaccination or at least a treatment by that time. But I think that when flu season rolls around, even if everything goes back to normal, well, not normal, but a new normal for the time being throughout the summer, everybody starts to try to go on vacations, life tries to go back to normal for a bit. I think that by the time the fall rolls around, not only are we going to be fighting the flu, but we're going to be fighting COVID-19 again, and potentially a stronger form of that. They will end up hospitalizing and killing more people, unfortunately, which therefore we're going to have to shut the economy down again, potentially. So for me, at this point, the risk highly outweighs, the risk outweighs the reward. Totally. And so I want to go over my specific option and what my plans are. So right now, we'll go over to the options chain, and I have a position, you can see right here where it says POS, on these. This is going to be your date, September 17th, September 21st. I'm sorry, I have a stroke, guys. If we scroll down, you can see here the strike price is going to be $240. So this is going to be the strike. This is going to be my put. Currently, if I click here, you can see these are the buy-ins that I have. I have to move this out of the way in order for you guys to see. There we go. So these are my buy-ins. Currently, I'm down $84 a piece on both of them, but that's not a big deal. Now, when I buy something, any leap option or anything that's expiring 6, 8, 10, 12 months from now, what I normally do is buy in with multiple buy-ins. So say right now I have $4,000 in this position. What I would do is say I want a total of 10. I wouldn't just throw $10,000 into this position. I would put 4,000 in, 4,000, and then another 2,000 to average myself into a position, especially over the long term. Now, something else to talk about is going to be earnings season. So far, we're about to get into the thick of earnings. We have had companies like banks like Wells Fargo have terrible earnings. We've seen JP Morgan have terrible earnings. We have seen Delta not have the best earnings. We have seen, I think, Spirit has yet to go. We have Boeing coming up. We have Amazon coming up, which should be good. I think they're a little overpriced. We've had Netflix coming, which was not the worst or the best, but we have a lot of these big companies like Apple and Microsoft and the big FANG, and this could be a catalyst to push the market in either direction. And I think the reason that we're not rolling over and dying right now in the market and making not new lows but starting to head down is simply because we're anticipating something. The market is really anticipating any news, anticipating any earnings. We're anticipating something before we make the next leg up or we start to retrace to the backside. And so I think that that's really what we're waiting for. So this is something that I'm going to be watching. And now if we go back and we talk about the position that I have, and I made this point in the March 20th, or the March, I think it was March 20th. Yeah, March 24th or something, 2020 video on the SPY puts that I made before, which was one of my first videos back in November. It's funny. But if you were to watch that again, I said that while I was bearish in that position, I still had a lot of long-term positions. Like even now, I still have a good amount of money in CCL. I sold some more today. I still have $30,000 in Uber. I still have Wynn Resorts. I still have a little bit of Boeing. I still have a lot of long positions. So not only is this a position that I'm planning on taking as a trade, but it's also kind of a hedge against, myself, because I am in not fully anymore. I've kind of gotten rid of a bit of my my long positions, but I don't know. We'll see. And here we go, churning up on the market today. So trying to make little higher highs, but we'll see what happens. This is my plan. I want to know what you guys think. I want to know if you think that the stock market is overbought right now. I definitely think that, while we're still half and half, I don't think that things are still a deal anymore. So let me know. What do you guys think? Are you holding long-term positions? Do you trust this rally that we have? Do you think we're going to fade? How far do you think we're going to fade? Let me know what you guys think. If you're interested in joining the Academy, we are giving away 1 month for free because of everything that's going on. I know a lot of people lost their jobs. Money's tight right now. I don't want that to be a reason for people not to learn about the stock market and not to build a skill that's going to last them a lifetime simply because they're out of work. So if you go down in the description, you can click on the link. You can use the code freeacademy, all one word, lowercase, to get your free month. And let me know what you guys think. Let me know what your plans are on the market.